Welcome back. This is Corporate Radar. Well, Lalit Agarwal, the founder and MD of V-Mart Retail, joins us on the show. V-Mart Retail, well, the impact of the GST rate cut incremental sales due to the lower rates, festive demand, outlook, all of that is what we're going to discuss. Hi, Mr. Agarwal. Good morning and good to see you in. Well, let's get to the first question. What proportion of your sales value and volume come in below that 2,500 rupee mark? If you could help us out with that.
We are a value retailer and largely catering to tier 2, tier 3 towns. So our customers don't have that kind of money to buy things which are above 2,500. So almost zero.
Yeah. So it's a widespread portfolio-wide impact, sir?
No, I mean, so for us, almost 85% of products that we used to sell was below 1,000. So it was already in 5% GST criteria. So now only 15% of those product lines which we were sold, which was being sold above $1,000 are getting impacted. And that is a good news for all of those consumers. And it is also a good news for us because we don't have to segregate these pieces and while pricing, we need to keep those in mind and have multiple GST framework. But it is definitely a very good invited and very good perspective. And beyond this, I also see it as a good perspective where there are a lot of integration. There's a lot of consolidation of product lines and GST which has happened, which is in terms of the man-made fiber and the yarns, the entire value chain, which was earlier at 18%, where an inverted duty structure also was getting erupted. So overall, we believe that the apparel cost to the consumer will go down and will go down beyond what the GST rate has gone down.
Yeah, so 85% under 1,000 rupees, 15% above 1,000, but of course everything under 2,500. That's the breakup. So this 15% perhaps gets a bit of a booster for now.
Yeah. So
any way to put any numbers to it? What kind of volume impact?
So 15% also used to contribute 25% in value sales. So it was not just 15% is the quantity, but the value which used to come down from there was almost 20-25%. So now that should definitely go up because they will get a little more cheaper. And it's just not apparel, but then also footwear, where entire footwear has brought down from 12 to 5. And it is also a lot of FMCG products, where a lot of those. So I believe there should be a delta growth in these festive times. And then there may be a lull in these 15 days till the time of the launch and then till 22nd, because people will wait and want to have the new GST regime and purchase in that new GST regime. But yes, we believe there should be a delta 5 to 7% delta growth than what we were expecting from these consumers which were buying above that particular limit.
That's okay. You answered partially my first question, Mr. Agarwal. I was exactly trying to come to that. So how much more is the GST-related flip? So you said 5 to 7%, which means if you talk overall festive season sales, so let's talk third quarter, because I mean this last few days of September will settle here. So either you can tell us third quarter number or this festive over last festive. What is the total growth that you would expect now? In terms of, let's say maybe revenue, or you can say volume or value, whichever way you want to,
No, so I think we are definitely eyeing ourselves, and then the way we are trying to open up new stores, as well as the way we are driving our capability internally, so as to get a little better like-for-like store. So we believe we should be on an overall company level growth perspective, we should be touching around 20% growth, and we should be driving that kind of growth, overall growth. Year on year, and that is a little more ask from the team, and that is what we believe we should be able to do, and that is what we are gung-ho and we are planning for.
20% growth for FY26.
20% growth in this festival period.
In the festive period, okay.
Festival, yeah.
Okay, all right. So festive to festive, 20% growth thanks to the added GST flip that's happened. Now, sir, I want to get back to the point on pricing, and what you said is 85% of your products anyway were under 1,000. But now that the 1,000 cap goes away, it's been moved much higher. Won't you look at undertaking some sort of maybe price changes as well, maybe slight up-trading with your customers? You don't have to keep products at, say, 999 now. So should we expect any, gradual, not immediately, but gradual, upward pricing tilt?
No, I don't think, because see, value market and value fashion is also becoming very competitive, and there are a lot of other players which are also coming into this market, and I think we are able to deliver better value. So a 999 or these 999s are psychologically also some 3-digit numbers and 4-digit numbers also drive a lot of consumer going into this particular basket or driving into that basket. So I think there is always a pricing policy that we follow. The GST rates definitely in those times wanted us to put some lower margin if we want to keep it at 999. But yeah, that may go up, but it is very marginal, very, very small. I don't think that will impact. But yes, we definitely want to bring in more consumer who can consume or who can actually use better product, which are better designed product. Because as we are seeing more Gen Zs and we are seeing more fashion coming in, so we definitely believe that better acceptability of better fashion and better product is something that we want to drive, and that will come, and price shouldn't be a barrier. But yes, largely our consumers are those consumers who do not have that kind of money to spend. So we also want to keep an eye on their pocket, and their pocket doesn't go up because their incomes are not going up too much, and that is what is very important, and that is what is the major criteria for us to take up the ASP or the price of the product. So if the country does well, if the economy does well, if their income grows and the per capita income grows, then the higher price or elevating the prices could come in. But we are not expecting any profitable jump on from these lines on gross margins.
All right. Mr. Agarwal, the next big cue is going to be the Bihar election, right? And from a market perspective, the street is divided. Whether or not we'll see a breakthrough with the United States before the Bihar election, or maybe some believe that maybe, Mr. Modi will not want to make that call to Trump ahead of that state election. So we'll have to see how that goes. But from your perspective, that's a large market for you. Ahead of the elections, traditionally, what have you seen? A bit of a boost, consumption goes up, there'll be a lot of movement?
So ahead of the election, normally it is not a great news. Normally there are disturbances and local disturbance which comes in. But yes, once the elections are over, we have always seen some bit of growth coming in, and that is what we are expecting again. That in every election brings in some money in the economy, brings in some movement and some mobility. That definitely drives a lot of business, and the sales generally goes up after the election. So we are expecting some bit of disturbances during the election period. But yes, the expectation of having a better business after the election is definitely there.
Okay, all right. Lalit, we'll leave it there. Thank you very much for joining us. And we wish you all the best of luck for this festive season and beyond. And we'll talk again soon. Thank you very much. That's V-Mart with some pointers with regards to what this GST cut can do for their portfolio. 25% of the value. I mean, that perhaps gets a bit of a bump. 20% growth in this festive season overall is the guidance coming through from V-Mart.